What's up, guys? It's your boy Samuel Tochi. I've gotten several requests from people on how to plot psychology levels on gold. So yeah, I trade gold majorly. So in this video, I'm going to show you guys how to plot psychology levels correctly on gold. Before I get started, if you want to learn how to trade the forex market or sharpen your trading skill, then hit the subscribe button and turn on post notification to get notified whenever I drop new forex related videos. Okay, that's it. Let's get started. So psychology levels are mainly whole numbers. They are levels where big banks, hedge funds, big market traders pay attention to. So they are whole numbers. For example, if you go to the market to buy, let's say you went to get something from the market, and someone said, okay, the price for this, let's say sneakers, is 50,000, 50,000 naira, let's say, for instance. So you want to price the person in whole numbers. You want to price the person, let's say 45k or 40,000. You understand? You won't go and be pricing the person 41,000. You understand? We like pricing people in whole numbers, in whole levels. So psychology level 2 are whole numbers. There are places where big banks, hedge funds pay attention to. So there are places where these banks, these hedge fund, most likely put their take profits. There are places where they hop into trade or hop out of trade. So that's why markets tend to react at those zones. So let's plot the first psychology level. Reading the current market position, you see the market now is at 1988. So the random number day, or the whole number, sorry, day is 1990.00. So let's remove the 37.00. So now from a psychology level to another psychology level is 50 pips on gold. Is 50 pips. So let's plot the second random number. It should be what? Below, from 1990 down to 1985. So let's set it to a 0.00 again. Okay. Now down again from 1985 to 1980.00 again. Those are psychology levels. Okay, let's add more on top from 1990 to 1995.00. So now if you um use your ruler to calculate it correctly to see how many pips, you see that from one psychology level to another is 50 pips. So let's try it now. From here down to this zone, you see it's 50 pips. So let's add more below. So now from 1980 to 1975. So you see those are whole numbers. Okay, from 1975 to 1970, remember 0.00. So each of them are 50 pips. If you know how to calculate pips on gold, this should be like super easy for you to understand. This particular psychology level of a thing should be super easy for you if you know how to calculate your pips on gold correctly. So the next one should be 1965.00. Let's add one more. So 1960. Okay. So now that's it on psychology level. From year to year is 50, from year to year 50, and so on and so forth. So if you look closely at these psychology levels, let me zoom it in. Market tends to react whenever it gets to these zones. Let's see. You see, when market got to this area, it reacted. You see, it got to this point here, it reacted. It played around before breaking it. You see, sorry. See, when market got to this area too, when market got to this area, it played around. You see, when market got to this zone too, let's see this place too, it played around. When market got to this area too, it played around. Okay, so you see, when market gets to those zones, to those psychology level, it reacts. You see here too. Let's not forget here. You see the reaction there too. You see when market got here too, it reacted. You see here too. When market got here too, these zones here, it reacted. When market got to, mainly when market gets to all these psychology levels, it do react. It do show some kind of reactions. And mind you, psychology levels are not meant to be traded alone or traded blindly. You need to add it with your full price action strategy. Let's say your trend line, your moving average, um, etc. So it's not meant to be traded blindly. So you see, when market gets to all those zones, it do react, it do react, it do react, it do react. So with your complete trading strategy plus this psychology level, it gives you more confirmation on how to trade the forex market easily. I'll be making more videos on my personal strategy I use on gold. I trade mainly gold only. So I'll make more videos on how to on the strategy I use on trading gold personally. So that's it on how to plot psychology levels on gold. They are just whole numbers that big banks, hedge funds pay attention to. They are places where big traders most likely put their stop loss, their TP. So they hop in into trade at those zone, or they hop out of trade at those areas. So you can see from 1995, 1919, 1985, 1980, 1975, 1970, and so on. At this point now, the market is just playing around, playing around. So if the market should open with your analysis and this psychology level I've shown you guys today, you should just add it as one of your confluences on in your trading strategy. Just add this psychology as one of it. Let's say you have four, just add this one into it to make it five. So 3 out of 5 is already a strong confluence for you to get into the market. So I'll be making more videos on the strategy I use on trading um, gold majorly very soon. Maybe probably next week I'll be posting on weekly basis. So do well to subscribe and turn on post notification to get notified whenever I drop new forex related videos. I'll be posting twice a week majorly. All of them are forex related videos. So that's it guys on how to plot psychology levels on gold. If you have any question, do well to drop it in the comment box below, and I will do well to reply you guys quickly as fast as possible. So that's it guys. See you on my other videos. Thank you.